A credit card provides a revolving line of credit. It enables users to make purchases and pay later. Available credit replenishes upon payment. This offers ongoing access to funds for users. The credit card process starts with a purchase made by the cardholder. Next, a statement is generated, summarizing all transactions within a billing cycle. A due date is then set, indicating the final day for payment to avoid interest. A grace period is provided, allowing time to pay without incurring interest if paid in full. Interest accrues on credit card balances carried past the due date. The annual percentage rate, APR, is the interest rate for a year. Interest calculation is based on the APR and outstanding balance. Higher APRs and balances result in more interest charges. Cash advances provide immediate access to funds, but come with significant drawbacks. Interest charges on cash advances begin accruing immediately. Unlike purchase transactions, cash advances typically have higher fees compared to standard credit card purchases. These fees can substantially increase the overall cost of borrowing. Due to high costs, cash advances should only be considered in emergencies. Explore all other financial options before resorting to a cash advance. Credit cards provide a revolving line of credit for purchases. Debit cards directly deduct funds from the user's bank account. Charge cards necessitate full payment of the balance each month. Prepaid cards are loaded with a specific amount of money in advance. Credit card rewards programs are funded through several key revenue streams. Interchange fees, paid by merchants on transactions, are a primary source. These fees are charged to merchants for processing credit card payments. Interest charges on outstanding balances also contribute to funding rewards. Cardholder fees, such as annual fees, further support the reward system. These combined revenue streams enable banks to offer card rewards. Interchange fees are charges merchants pay to the card issuing bank. These fees apply to each transaction made with a credit or debit card. The fees are typically a small percentage of the transaction amount. Interchange fees serve as a key revenue stream for banks. This revenue is often used to fund credit card rewards programs. Rewards programs incentivize card usage, benefiting both banks and consumers. Credit cards are available in various types to suit different spending habits. Cashback cards offer rewards in the form of a percentage of spending return. Travel points cards provide points redeemable for flights, hotels, and other travel expenses. Store co-branded cards offer benefits and rewards specifically at affiliated retailers. Rewards can be redeemed in several ways. Common options include statement, credits, flights, and hotels. Merchandise is another potential redemption choice. The value of each redemption option can differ. Carefully compare values to maximize reward benefits. Always check for expiration dates on rewards, points, or miles to avoid losing them. Be aware that rewards points can devalue over time, reducing their purchasing power. Some programs have restrictions on how and when rewards can be redeemed. Understanding these limitations ensures you maximize the value of your rewards. Credit cards provide key protections for consumers against financial risks. One major benefit is protection against unauthorized charges. Cardholders are not liable for purchases they didn't authorize. Credit cards offer dispute resolution for billing errors. This service helps resolve incorrect charges or discrepancies. Cards also protect against fraudulent activity on the account. Cardholders are generally protected from unauthorized charges. This protection applies to credit card transactions. Protection is conditional on promptly reporting the issue. Timely reporting is key to avoiding liability. Cardholders are not typically responsible for fraudulent charges. Prompt action ensures maximum protection against fraud. Credit card companies provide dispute resolution for billing errors. This process helps resolve disputes between cardholders and merchants. The company investigates the disputed charge or billing error. Resolution aims to fairly address and correct any issues. Interest calculation is based on the outstanding balance. The annual percentage rate, APR, is a key factor. Interest can be calculated daily or monthly. Paying the balance in full avoids interest charges. Timely full payments are key to avoiding interest. Select a credit card that matches your typical spending behaviors. Ensure the card aligns with your current credit profile and score. Carefully evaluate rewards programs offered by different cards. Consider interest rates and fees associated with each card option. Start by analyzing your current spending habits. Track where your money goes each month. Identify your highest spending categories. Common categories include groceries and travel. Determine which rewards align with your top spending. Choose the category that offers the most value for you. Determine if a credit card's annual fee is worth the perks and rewards. Some cards provide benefits that exceed the annual cost. Evaluate if the value of perks justifies the fee. Consider rewards and benefits when deciding. Automating credit card payments helps ensure timely payment. This prevents incurring late payment fees and potential penalties. Set up automatic payments through your bank or credit card provider. Configure the automatic payment for at least the minimum amount due. This ensures you avoid negative impacts on your credit score. Credit utilization is a key factor in determining your credit score. It refers to the amount of credit you're using compared to your total available credit. Maintaining low credit utilization is crucial for a healthy credit score. Experts recommend keeping your credit utilization below 30%. High credit utilization can negatively impact your creditworthiness. Transaction alerts help monitor credit card activity in real time. Setting up alerts allows for the prompt detection of unauthorized charges. Early detection minimizes potential financial loss from fraud. Customize alert settings based on transaction amount or type. Regularly review alert settings to ensure optimal monitoring. Foreign transaction fees apply when using credit cards abroad. These fees are charged by credit card issuers. The fees are for converting currency or processing transactions. Some credit cards do not charge foreign transaction fees. Consider using a card with no foreign fees when traveling. Late fees are penalties charged for payments received after the due date. Timely payments help avoid incurring these extra charges. Late payments can also negatively impact your credit score. Maintaining a good credit score requires consistent, on-time payments. Promotional APRs offer lower interest rates for a limited time. Be aware of the exact date when the promotional APR period concludes. After this date, the interest rate is likely to increase. The new, higher interest rate can significantly increase your payments. Plan accordingly to avoid unexpected financial burdens. Traveling introduces unique credit card risks. Foreign transaction fees can increase costs. Card theft is a significant concern abroad. Always protect your card from potential theft. Inform your bank about your travel dates. This helps prevent transaction blocks. Choose the right credit card to align with your spending habits and financial goals. Pay your credit card balance in full each month to avoid interest charges. Take advantage of credit card rewards programs to earn points or cash back. Protect your credit card information to prevent fraud and unauthorized use. Regularly review your credit card statements and credit report for accuracy.